And reports released by the National Bureau of Statistics indicates that capital importation into the country declined by 54% quarter on quarter to $875.62 million in the second quarter of this year, compared to $1.91 billion recorded in the first quarter of this year. The largest amount of capital importation by type was received through portfolio investment at $551.35 million, representing 63% of total capital importation during the period. Now, what does this mean for various sectors of the economy? Combined with the recent decision of the Central Bank on the Bureau de Change, we have Tajuddin Ibrahim, Head of Research and Strategy at Chapel Hill, Denham, joining us to share his thoughts. Good morning, Mr. Ibrahim. Thank you so much for joining us.
Good morning. Thank you very much for having me.
Yeah. So 54% decline is a lot for one quarter. How did we get here?
Well, the 54% is materially high, just like you said. But I think what we should bear in mind is that we have seasonally lower second quarter capital importation, and this is consistent with what we have seen in the past 4 years. Since 2018, we have consistently seen the Q2 capital importation being lower than the corresponding period of Q1 of each of those years in 2018, 2019, 2020, and of course in 2021. So that looks to me like seasonality. And secondly, I think it is also a reflection of investors from all over the world accelerating their investment into Nigeria in the first quarter of every year, just so that they are starting on a strong note in the country. And by the second quarter, I strongly believe that they consider other regions, they consider other emerging and frontier markets where they take their investments to, just so that the other countries could also benefit. But it is consistent that we will always have lower Q2 numbers compared to the first quarter of the year. And I think we have not done badly in that context. So over the next 1 to 2 quarters, the expectation is that that number should rebound as investors globally consider Nigeria again in the third quarter and also in the fourth quarter of the year.
Isn't it possible as a country for us to have all year round, high investment? I mean, like you said, okay, so they want to start the year on a strong note, and then by second quarter, isn't that possible? Is there nothing we can do, like intentionally, to attract them all year round or all quarter round?
It is possible, and I think it is a reflection of what they will expect us to put in place in the country, and it is largely speaking investing in infrastructure. Global investors, take countries that have good infrastructure in place, they take them more seriously, and they see them as a more attractive investment destinations, particularly from a foreign direct investment standpoint. As we speak, 63% of the inflows that we saw in the second quarter went to, portfolio investments, which is not what the country really needs to boost its economy. What we need is more of foreign direct investment, and you will not see much of that if you don't have stable power supply. You wouldn't see much of that if there are excessively high risks in terms of security. You wouldn't see much of that if we have a case where the business environment is not as predictable as it should be. You wouldn't see much of foreign direct investment if you have, low level of, FX liquidity in your economy, and you have a case where foreign investors are concerned about the policies around foreign currency. So we need to put in place all these factors for us to enjoy stable increase in capital importation all through the quarters. So my view is that foreign investors consider some of these elements and they take countries where these factors are in place. They take them more seriously as good investment destinations for them. Up until when we fix all these issues, it is uncertain that we will see sustained increase on a quarter-on-quarter basis in capital importation into Nigeria, in my view.
Okay, so from the data also, we see that capital importation by sector was dominated by banking, and Stanbic did, very well in that. What lessons can we learn from the banking sector?
Well, I think one key lesson that we can learn from the banking sector, number one, to my mind, is that it is one sector where we can accelerate investment into the Nigerian economy, because that is one sector where we expect much growth, and also a sector where we expect a lot of innovation. When we talk about electronic banking, for instance, we expect a lot of innovation to spring up in that sector. When we talk about mobile banking, we expect a lot of innovation to spring up also in that sector. And this is also consistent with the planned digital currency of that the CBN is working on. So all those are innovative, and they are factors that could accelerate the inflows of capital into the banking sector. And the other sectors, such as the cement sector and also agri sector, could learn from this to put in place policies, to put in place factors that will encourage foreign investors into those sectors. That's one. Two is that the banking sector is one sector where credit flows into the economy. So I'm not surprised that we are seeing the sector as being the largest. And for Stanbic has a parent company, Standard Bank, sitting in South Africa. So it is relatively easy for them to attract foreign investment into the country in that regard. And if you take a look at the data again, you will see that Stanbic IB60, Standard Chartered Bank Nigeria, and also Citibank Nigeria are the top three banks in terms of capital importation into the country in the third quarter. It largely speaks to their parent companies in the under part of the world, and we'll probably continue to see that trend plays out over the medium to long term, in my view.
Wow. So we shouldn't take much of the glory then, because their parent company obviously have some influence, in seeing them shine through that the data there. But anyway,
Absolutely.
yeah. So foreign investors' confidence we also saw in the Nigerian equities market also wane in this period. Um, well, should we say there's also a bright side to it? Is this an opportunity for the domestic investors to, seize this opportunity and get into the equities market, or should we be worried?
Absolutely, there's a bright side, and the bright side is what you have spotted. It is an opportunity for local investors to consider investing in equities. Nigeria is one of the markets in the entire world where you have local pension investors having as low as like 7 to 8% of their assets under management in stocks. In the US, we have as high as like 23 to 25% of the pension money invested in equities. The same thing applies to other advanced economies such as the UK and also in Canada. We have other, even frontier and emerging markets where we have high numbers in terms of percentage contribution of equities to their assets under management for the pension fund administrators. So in my view, I think the current trend in the market is an opportunity for local investors, particularly the pension managers, to increase their exposures to equities because of the future gains that will accrue on the back of that. At some point, Nigeria is going to fix its FX problem. By the time that is fixed, you will see more inflows of foreign investors into this economy, into this market. And when they come, they will be buying from those that are bought at very cheap prices when prices are relatively cheap as we speak. So it is a huge opportunity for both the pension fund administrators and for also the insurance industry and also for other money managers locally to consider increasing their exposures to equities. Number one, we are seeing strong numbers coming out from the companies listed. Number two, we have relatively attractive valuations, and the economy is on a gradual recovery mode. So that suggests to me that they should consider increasing their exposure to equities before the foreigners will come back again and invest aggressively in the growth story of Nigeria, in my view.
And I like the way you said that very soon that Nigeria will fix its FX problem. And we hope that day comes really soon. But there's also the talk of uncertainty in repatriating capital and earnings by foreign companies and foreign individuals. And this is another discouraging factor to, why we see our FDI down and all.
Yes, so that is the case. And I think anybody that understands Nigeria, particularly the foreign investors that understand Nigeria, will understand that Nigeria, naturally speaking, would always have a currency crisis like every 4 to 5 years. We were in this situation about 4 or 5 years ago in 2016 when we had a slow economy, when we went into recession, and also we had FX challenges. But after that, those challenges were over us because the CBN responded accordingly, and we began to see improvement in the flow of FX in the market, and foreign investors came back to this market. So this is one of such of the periods where we will be challenged in terms of liquidity in the FX market. And I think, foreign investors will naturally slow down, but they will come back the moment we are able to fix this challenge of liquidity. Don't let us forget that the government has gotten approval, from the National Assembly to raise bonds, euro bonds, about $6.1 billion in this regard. So that should support the FX reserves and should put the CBN in a stronger position to supply dollar liquidity in the system as required by the market. So within the next 2 to 3 quarters, my feeling is that we are going to solve Nigeria's FX problems, and chances are that in the first quarter at the latest of 2022, we are going to see more foreign investors come into this market. Those that have found it difficult to repatriate their dividends are investing them in the respective stocks. And that is the strategy to adopt. We have seen Nestle Global increase their investment in Nestle Nigeria on the back of that. We have also seen Nigerian, we have seen Heineken International increase its investment in Nigerian breweries because they could not repatriate their dividends. So these are the strategies that they are adopting to solve the problem in the short term. But over the medium to long term, Nigeria is going to bounce back from an FX challenge, in my view.
We certainly look forward to when Nigeria will bounce back from the FX challenge. And I know manufacturers will be very glad when that time really comes to reality. Thank you so much, Mr. Tajuddin Ibrahim, the Head Research and Strategy at Chapel Hill Denham, for sharing your thoughts with us this morning. Enjoy the rest of your day.
Thank you for having me.
So we cannot talk too far away from the CBN's ban on BDCs, and that will form our next conversation after the break. Stay with us. It's Business Morning on Channels Television.